You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are watching, listening to the Financial Survival Network. Hey, my next guest and I, we're at the same beach in different places. I'm in Florida. He's in Puerto Rico. And we're both enjoying a sunny day in paradise, talking about Lobo Tiggre. And don't forget, you find him at independentspeculator.com. And Lobo, we have like so much to talk about. I haven't talked to you in about 2 months. And hey, I'll say one thing, the world hasn't gotten much better. I feel like we're in this slow motion implosion, you know, like a building being blown up on the strip in Las Vegas. They set off the explosives, nothing happens for like 5 or 10 seconds, and then it all comes crashing down.
That's a good metaphor. I'm always cautious about jumping on the arm-waving bandwagon. And, you know, my good friend Doug Casey has been accused of been saying the sky is falling for 40 years, waiting for the Greater Depression. And now it's really starting. I love Doug. I'm not throwing him under the bus there, but I mean, that's just a fact, right? He's been calling for the Greater Depression since the end of this, since the 70s kerfuffle. And that makes me very cautious. I also remember more recently in the crash of 2008 and all the crazy things the governments did in response. And my mentors, my elders, the people who taught me the business, thinking that this was it. There was no way they could come back from this. And then, so now we have COVID shutdowns. We have a new war in Europe and an economic war, which really is a world war, and all kinds of scary things. And it seems, it would be very easy to come up with a very scary scenario here, and I have to say, I'm pretty sympathetic to that. I mean, things look bad to me, but I just remember how bad things have looked before, and somehow the world didn't come to an end. The financial house of cards that is of particular interest to you and me and our audience somehow has proved so much more durable than any of us imagined it could be in the face of severe shocks. So, sorry, little bit of a digression there. We may talk about scary things, but I just want people to know that I'm not advocating immediate retreat to the Idaho bunker.
All right, me neither. And I look at the economy like one of those 57 Chevys in Havana. Its useful life ended many years ago, but with paper clips and chewing gum and a little Cuban ingenuity, they've managed to keep these vehicles on the road for, the better part of 65, 70 years. And there's definitely a metaphor there as well. But nonetheless, we got to live in this world, and hey, you make your preparations. But until that ultimate day comes, if it ever comes, and we don't know, it's like waiting for the big one in California, right? It's coming, you just don't know when, and hopefully you'll be gone long before it does.
Or Linus and the Great Pumpkin. But another metaphor, different communist country, the Soviet Union, back in the day, we all knew that it was a massive economic contradictions. It couldn't work. Like everything that we thought we understood from all of history said this has to end badly. And yet it went on for decade after decade. And I wasn't watching it that long. I came in at the tail end, last few decades, but it just seemed like, this may never end in our lifetimes. And yet reality does matter. And in the end, economic reality became a hat tip to Ronald Reagan for actually kind of seeing an object that was poised to fall and giving it a gentle push, an economic push that really, made, I don't want to mix metaphors here, but it made economic reality assert itself in the Soviet Union. And eventually it did come down. And I'm remembering where I was when I heard of the Berlin Wall coming down. I remember that whole denouement and perestroika and all that so clearly. And we were right, Kerry. Free marketeers like you and me, we were right. We knew this had to happen. And it's kind of sad to see the peace dividend now going into reverse and all kinds of new insanities being embraced. But the human nature hasn't changed. The world hasn't changed. I mean, it's changed in many ways, but not in this way. So I think we are right now. And I don't claim to know the future and when things will unravel, but I sure am glad I own gold and silver bullion, not as a speculation, not as an investment, but as insurance for when we are proven right again.
I couldn't agree with you more. And yeah, it's the same thing with China. We kind of see there's big stress fractures there. The centrally planned economy is failing there, and they're moving towards a greater oppression, restriction of freedom, and pretty much their experiment looks like it's coming to an end. That kind of hybrid of totalitarian capitalism seems to be running its course.
Crony capitalism at its worst. It's interesting that you frame it that way, because there's so many people that are totally convinced of the 21st century as the century of China thesis, and that this is, U.S. was the superpower in the 20th century, and this is going to be the century of China. Everything's going to be China. And I'm not saying it won't be so, but I am remembering that a couple of decades ago, people thought it was Japan, and that we're going to have to worry about the Zaibatsus running everything. And, it was all going to be Japan was the new superpower. And it seemed unstoppable. This growing powerhouse that nobody knew how to rein in. And then its own internal problems eventually brought it to stagflation, stagnation for years, for decades. So I could absolutely see that happening in China, which is not monolithic. It has different languages, different cultures. And it's not just the Uyghurs over there on the margin. I mean, the Han and Mandarin, there are big differences in China. And the growth story kind of helped keep everybody together. And if that growth story slows or unravels, how durable is what we see as China today? I don't know. Well, and let me back up the truck just a moment. I think this highlights something. And the way you said it, I think, is really key, and how people perceive this totalitarian capitalism and so on. And I remember in 2020, when the COVID lockdowns were happening, and it looked like China had, even though the outbreak originated there, it had much less trouble with COVID than the Western countries. And people were talking about, oh, well, that's because this is the price of freedom, right? You have freedom, you have anarchy, you can't control the virus. Look how great they're doing in China. A little bit of authoritarianism in the face of such a dire threat could be a good thing. And there were many people that were very admiring of China and its response. Of course, I also just don't believe the statistics we saw out of China. It originates in China. We have 6 cases. Like, how does that work?
Yeah.
But never mind that. But just this idea of, oh, well, maybe sometimes having that totalitarian power is a good thing. But look at the price they're paying now. Whatever you can argue about whether the Swedish model was better or whether Trump should have stopped flights or this, you can argue about all this stuff. But just look at the world today. The West is moving ahead. Pandemic has become endemic, or however you define that. And China is still struggling because of the lockdowns, because of they didn't allow the markets and the different options for treatment and the vaccines and all to come into play. They insisted on their Sinovac. And so that authoritarian thing that people admired in 2020 is now proving that it was not a good idea, that freedom, even if it's messy and chaotic, and it may cost more in the short run, in the long run, it is for the best for society. Again, we were right, Kerry. Freedom works. The market provides.
And you just have to look at the U.S. to see the states that are doing best and the states that are doing worse, and their reaction to the pandemic. And you see that the states that were freer, like Florida, like Georgia and other southern states, Texas, doing much better than the states that really uh, really put down the velvet fist, you know?
My favorite way of looking at that, and because every side has spin, and if you're a red or a blue flag waver, hooray for our side, and it's very hard to triangulate on truth in that kind of environment. But one thing that can't be faked is people voting with their feet. And you look at that out of New York and California in particular. I think that's quite telling.
Yes.
And I think it's an excellent thing. I think it is an ethical, positive good for the world for people to vote with their feet. That's why I'm here in Puerto Rico. I'm voting with my feet. And if governments are forced to look at taxpayers as customers whose business must be won instead of medieval serfs that can be ordered around and sent off to die in battle, I think that forces governments to act differently and hopefully better for those customers.
I couldn't agree with you more. So looking at markets, we're in the midst of a bear market now. It's behaving in classical bear market fashion. At least to some extent, it's a reaction to the Fed's policy of, I wouldn't call it increasing rates. I'd call it normalizing rates. 30-year mortgage, 7% now. And we see that that inflation, all that, which had been dormant, relatively dormant, it was never really gone, but it was just not as big a problem for the past 40 years, has come roaring back, double-digit inflation and Fed panicking more or less because they didn't tighten earlier. All these things are happening here, and the average person really has no clue how to handle it, Lobo.
Yeah, the scary thing there is how the U.S. consumer and the world is different. And it looks like people in Europe are starting to pull in their horns and prepare. I mean, they've got a war, a physical shooting war there to drive home the point. But it's the economic decisions that people are making that seem to be more eyes open a bit over there in Europe. But in the U.S., the consumer's still spending, and they're charging up credit cards. It's incredible how even though they've supposedly retired the word transitory, the average person out there still thinks the Fed's going to beat inflation, that it's going to go back to what was what people now think of as normal, a very low inflation or low reported inflation environment. But that was an aberration, and people think that aberration is what's normal, and it's going to come back. And we'll see we have PCE coming out tomorrow that could really shake things up. The last CPI print was already a big shock to not our audience, but to the mainstream out there. They were still drinking the transitory Kool-Aid, and consumer sentiment shows that people still think that the Fed is going to beat inflation handily and soon. The near-term expectations are elevated still, not as much as they were before. So interesting data about to come out on this. And it'll be, I think, particularly for commodities investors and gold bugs, silver bugs, it'll be really telling when those expectations for inflation start becoming unanchored or separated from the transitory Kool-Aid. I see that as being the big ingredient missing from the current bout of stagflation compared to the 70s. In the 70s, even as a kid mowing lawns and babysitting and stuff, I remember everybody was talking about higher prices ahead and how it made sense to lock things in now. If you could buy a car or a refrigerator, anything that wouldn't go bad. And I was putting my lawnmower money away in silver Morgan dollars. I like the Morgan dollars. Because everybody could see it, and that's missing right now. Everybody. I mean, there's you and I and our audience. We're a tiny minority in the world. The everybody out there still thinks the Fed's going to beat inflation. It's all going to be fine. When that changes, then you've got high inflation, slowing growth, maybe even a more undeniable recession. Even though today, as you and I speak, we had a higher GDP number, official GDP number. I still see the U.S. sliding into recession, and I see the global economy sliding into recession. And no country is an island, even those that are in the, we haven't completely deglobalized yet. So I do see high inflation, recession, stagflation, and that missing ingredient. If we have that expectation creep back in again, that's when I think gold and silver really take off, even if the dollar seems strong in foreign exchange because of how much worse the other countries are.
Yeah, well, I always say the dollar is the best looking house in Baltimore.
I thought you were going to say horse in the glue factory. That was a good one.
Hey, got to mix these things up here.
Sorry, let me jump in on the Baltimore thing. I remember the Agora offices used to be centered there. I don't know if they still are, but I remember Bill Bonner making a very funny remark in his daily reckoning, and he was saying he defined gold as the only thing you could leave on the front car seat in a car in Baltimore, and it would be perfectly safe from theft.
Yeah, well, we've seen all those things where the people choose candy bars over gold or silver. Yes. And the ignorance level is pretty staggering here. But hey, so as far as the road ahead here, so we know inflation, the genie's out of the bottle and you can't just get it back in. It doesn't work that way. There are cycles, there are inflationary waves. All that, maybe they'll go down a little bit now because commodities have gone down, but the energy situation is still pretty dire, especially in Europe, even though right now they seem to have enough nat gas to get through the winter. That can change very quickly.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah. All right. Let me try to make this useful here. And you know that I'm not for making big, bold predictions. The market's going to crash next week or, whatever. But as a speculator, of course, I look forward and I have expectations and I bet accordingly. Here's how I'm looking at it. I think several things. One is the recession in Europe and the chaos in the UK are very indicative. And the way that the Bank of England pivoted, supposedly temporarily, but they went right back to QE the moment there was any financial instability. And as you and I speak today, Christine Lagarde gave her talk about 75 basis points and how the ECB it's job one, and they don't have a dual mandate, right? Their job one is inflation, and they're aware that their fight against inflation can cause pain, but they have to beat inflation. So I think it's going to be difficult. Like Europe may have enough gas for now. I mean, there's a story about natural gas prices going negative in Texas because there was a bottleneck. Like they couldn't. It was like March of 2020. They couldn't get rid of it.
Yeah.
But that's a fluke. That doesn't mean that nobody wants gas anymore. So I think this is a key driver here. Again, the economy, people want to deglobalize it. 2020 shocked everybody, but it is still a global economy. And Europe going into a world of hurt, I think that's baked in the cake. And that affects everybody. Meanwhile, you still have China, we talked about, still in a world of hurt. But I think there's actually, so in the near term, that's bad. And then you have, despite the GDP number today, which I think will be revised, but anyway, I see the US slowing. And you look at just the news out of the Meta, Facebook, and Microsoft, and these tech giants, these massive layoffs are starting they're ahead. They're I think we're looking at near-term pain. So how do we invest accordingly? Depending on the perceived strength of the dollar and what the Fed does, near term, there could still be more fluctuations in gold and silver. I would see those as buying opportunities. I'm not worried about gold going down to, 1,300 again or some of these dire predictions. In this world, I don't see that happening. So I like gold and silver on weakness ahead. I would hold off on the industrial metals that I like in minerals. I love copper. I think with the electrification, we've talked about this, whether you think ESG is a load of dingoes' kidneys or not, that's the way the world's going. And that really puts a turbocharger on the copper story, I think, for decades ahead. But in the near term, any industrial metal or commodity is going to be facing serious headwinds as the world grapples with recession. So I'm not buying copper stocks or any industrial metal stocks at all right now. Maybe Q1 next year, if the Fed pauses to see how their policy is doing and the ECB is still tightening, you could see the DXY go down and commodities go up. Maybe that would be a good time to look at. I'll update my view then as we see how the recession shapes up. So I like gold and silver on weakness. I'm holding off on copper and industrial metals. I like uranium regardless. I mean, we've talked about this before too. It's
Sure.
base load power, the kind of thing that you need to keep your hospitals running 24/7. I think this does insulate it significantly. Nothing is entirely recession proof and certainly not market crash proof. If the Fed breaks something and the markets really melt down, everything goes on sale, including uranium. But in that case, I would see the uranium being like gold, something that drops very sharply and won't come back in a very quick V. Because of what I've said, I do think the reality is that uranium is fairly insulated from the economy. It's absolutely necessary. It's still below the average cost of production to, years of mine supply deficit.
Yeah.
And an upward trend now. So I like that a lot. I'm not worried about uranium in the economy. The only caveat there is a potential nuclear accident, and there is a war raging around Europe's largest nuclear power plant. So
Yeah.
that doesn't keep me out of uranium, but it does prompt me to take profits when I have them. So, and then the other big category would be oil and gas. I actually like oil and gas a lot more than I have for years. I do think that triple-digit oil prices are going to be the new normal as the new Iron Curtain goes up. I just don't see us going back to the way things were before. Doesn't mean it can't fluctuate in the near term. And I expect that it will. And it's one of those things, energy, it goes into the economy. It's part of what the knee-jerk reaction when recession looms is, oh, well, energy prices are going to fall. So we just talked about, natural gas in Texas, the Permian going negative for a day. So those kinds of things can happen. I'm not like rushing into oil and gas plays right now. It's more like, let's see how the recession shapes up. But if I can see a great, best in class type oil and gas play on sale because of the wrong reasons or short-sightedness or, market volatility, that would be very attractive to me. So that's the so what, Kerry. That's what I'm doing right now in light of these things we're talking about.
Yeah, and the energy stocks have been huge performers, continue to be high dividend yield. So you get a little bit of inflation protection, additional inflation protection. And, I always said, if you don't like the price of electricity, if you think it's too high, buy your local utility because they're the ones making out on it. And, it's a good hedge, and it's always worked for me. If you don't like the price of gasoline, buy some oil companies and profit on the upside, right?
That's quite clever. I've been doing this for I don't know how many years, and I had never put that particular two and two together. Okay, so you don't get a choice. You have to pay more at the pump. But if you own the guys on the other side of the pump, you can profit from that too, and that offsets your cost. I don't know why I never thought of that before, Kerry.
Let's just say and I've been doing this for years. Let's just say that you pay $100 a month for your electric bill, right? And it goes to $110. And obviously with electric utilities, a huge percentage of their costs are depreciation on their existing plant. And the fact is, when they raise their rates, their profits are going to go up probably more than 10%. And in theory, at least the share price is going to go up, and they'll be upping their dividend as well because they're big dividend payers, most utilities. So, if it's $10 a month, that means that your bill went up by $120. If you own, say $5,000 worth, you might see your the value of your investment go up 1,000. So it's a way to hedge against things that you have to buy. Other things.
I'm a little more comfortable with the oil companies than the utilities. I absolutely get it, and utilities are regarded as a safe investment. But I always remember that the utilities don't have control over their pricing. It's a political process, and so you could see that happen, but there could be delay. Like eventually, the politicians have to let them raise prices, or because if they get to the point where they can't produce energy or whatever it is, water, whatever the utility is, they have to let them raise prices eventually. But that can take a long time. And if it's an election year and nobody wants to see, the utility jackets prices up before the election, like right now, you could see, I could see squeezes in those utilities at times in that space. But conceptually, the idea makes perfect sense to me. I will give that more thought.
Hey, and food. I mean, obviously, there's less direct relationships with a lot of what you need to buy. Like car prices are going up. That doesn't mean that the automakers are going to make more money, although they have through the pandemic and through supply constraints and such. But there's a lot of things that it does work with. Well, I think we'll leave that pearl of wisdom. We'll leave it at that. Just the only other thing, the dollar, the strength of the dollar, where it's gone. Like we said, the nicest house in Baltimore, because look, euro is dead man walking. Yuan, I mean, they're dumping dollars to try to boost the yuan, and all of these currencies are heading to the cellar faster than the dollar. The dollar will be the last man standing in this eventual shape up of the New World Order. You surprised by the dollar's relative strength?
Yeah, honestly, I have to give credit to Brent Johnson, the dollar milkshake guy, for being a better dollar whisperer than I.
Same
it's interesting. Here, I just did an interview with him a couple of weeks ago, and he thinks that the dollar was due for some correction in the near term, and he actually, not to toot his horn too much, he could do that, but it's interesting. When I interviewed him, he had just closed some of his trades. He had taken some profits on the high dollar, pretty close to the top after the UK kerfuffle. So hat tip to him. But the reason why I bring this up is that even Brent Johnson, the dollar milkshake guy, can see a scenario where, like, you do have that stagflation and the unhinged inflation expectations, where you could have a higher dollar and higher gold at the same time.
Yeah.
Where, the dollar isn't really more valuable. It's just not as bad as the other currencies. And the same factors that would drive people into the dollar would drive people into gold in that market. So under the right circumstances, even Brent can see that too. I think that's quite telling. Personally, the sort of, in my investment timeframe, catalyst I'm looking for is something we touched on earlier. The Fed has already communicated a terminal rate, and unless there are huge surprises in the data, they'll probably end up around there. If not at the end of this year, then very early next year. And at that time, I think the ECB will still be dealing with much more difficult, higher levels of inflation. And so you could get in a place where the ECB seems to be more hawkish than the Fed, and then that would put the dollar, the DXY, which is very heavy in the euro and the pound, I think that would potentially put the DXY into reverse, and that has been highly correlated with commodities, and particularly gold and silver. So that's a possible projection, that is a projection of a possibility as opposed to a rock solid, bet the farm kind of prediction. But I think we could see a significant turn in the commodities and the metals that you and I hold dear early next year.
Agreed. All right. We will leave it at that. Appreciate you coming on as always, Lobo. The site, independentspeculator.com. Go check it out. Must reading. And hey, we'll see what happens here. We'll touch base with you in another 6 weeks or so. The picture could be completely different. We didn't even talk about elections.
Yeah, it'll be post-election. Yeah,
this is a porn-free zone here, so we try to avoid that. But you know how it is. This is a family show. So, hey, got a question for Lobo? Shoot me an email, kl@kerrylutz.com. Don't forget, at the site, you can click the link to his site, independentspeculator.com. And while you're there, sign up for your free newsletter. Lobo, always a pleasure, always thought-provoking, always gives you something else to think about. Take care.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.